Inflation is a silent thief. It creeps up on us, often unnoticed, until it has already done significant damage. It eats away at the value of our savings, diminishing the purchasing power of the money we've worked so hard to earn and set aside. It makes it harder to afford everyday goods and services, from groceries to gasoline and everything in between. The cost of living rises, and our paychecks don't stretch as far as they used to. In 2025, the United States is facing a resurgence of this economic challenge. Inflation rates are climbing, and the impact is being felt across the nation. This has profound implications for individuals, businesses, and policymakers alike. Families are struggling to make ends meet, businesses are facing higher costs, and policymakers are under pressure to find solutions. The current bout of inflation is fueled by a confluence of factors. Supply chain disruptions have led to shortages of goods, driving up prices. Lingering effects of the pandemic continue to affect production and distribution, while geopolitical tensions have added to the uncertainty and instability in global markets. As a result, consumers are feeling the pinch, and businesses are grappling with increased costs. The price of raw materials has surged, and these costs are being passed on to consumers. The Federal Reserve, tasked with maintaining price stability, is caught in a delicate balancing act. They must navigate the complex economic landscape to curb inflation without stifling economic growth. They must curb inflation without stifling economic growth. Raising interest rates can help to cool down an overheating economy, but it also risks slowing down economic activity and increasing unemployment. The decisions they make in the coming months will have far-reaching consequences for the U.S. economy and financial markets. Investors, businesses, and consumers alike are watching closely, hoping for a path that leads to stability and growth. As we navigate these challenging times, it's important to stay informed and prepared. Understanding the factors driving inflation and the potential impacts on our daily lives can help us make better financial decisions. Whether it's adjusting our budgets, seeking financial advice, or staying updated on economic policies, we all have a role to play in weathering this storm. Together, we can find ways to mitigate the impact of inflation and work towards a more stable economic future. While inflation poses significant challenges, it also presents an opportunity for resilience and adaptation. By staying vigilant and proactive, we can navigate these turbulent times and emerge stronger on the other side. The Consumer Price Index, or CPI, is a key measure of inflation. It serves as a critical indicator for economists, policymakers, and everyday consumers alike, providing a snapshot of how prices are changing over time. The CPI tracks the average change in prices paid by urban consumers for a basket of consumer goods and services. This basket includes everything from groceries and clothing to healthcare and transportation, reflecting the diverse spending habits of the average urban household. Recent CPI data paints a clear picture. Inflation is on the rise. This trend has been observed across various sectors, indicating a broad-based increase in prices that affects nearly every aspect of daily life. In January 2025, the CPI rose by 0.6%, exceeding economists' expectations. This unexpected surge has raised concerns among financial analysts and policymakers, who are now closely monitoring the situation. This marked the largest monthly increase in a decade. Such a significant rise in a single month is rare, and often signals underlying economic pressures that could have long-term implications. The year-over-year increase in the CPI was a staggering 4.2%, well above the Federal Reserve's target of 2%. This substantial deviation from the target has prompted discussions about potential policy responses to curb inflation. These numbers reflect the reality on the ground. Consumers are feeling the pinch as prices for everyday items continue to climb, making it harder to stretch their dollars. Consumers are experiencing sticker shock at grocery stores, gas stations, and restaurants. The cost of basic necessities like food, fuel, and dining out has risen sharply, impacting household budgets. The rising cost of living is eroding purchasing power and putting a strain on household budgets. Families are finding it increasingly difficult to make ends meet, as their incomes fail to keep pace with the rising prices of goods and services. This financial strain is leading to tough choices and sacrifices, as households prioritize essential expenses over discretionary spending. In response, many are seeking financial advice and turning to budgeting tools to manage their expenses more effectively. Community support groups and financial literacy programs are also playing a crucial role in helping individuals navigate these challenging times. policymakers are under pressure to address the rising inflation. The Federal Reserve and other economic authorities are exploring various measures to stabilize prices and support economic recovery. These efforts include adjusting interest rates, implementing fiscal policies, and promoting economic growth. As inflation continues to be a hot topic, it is essential for everyone to stay informed and engaged. Understanding the factors driving inflation and the potential solutions can empower individuals to make better financial decisions and advocate for policies that promote economic stability. Despite the challenges, communities are coming together to support one another. By sharing resources, knowledge, and encouragement, we can navigate these uncertain times and work towards a more stable and prosperous future for all. The Federal Reserve faces a daunting challenge. They must rein in inflation without triggering an economic downturn. The central bank's primary tool for controlling inflation is interest rates. Raising interest rates makes borrowing more expensive for businesses and consumers. This can help to slow down economic growth and curb inflation. However, raising rates too quickly or too aggressively could push the economy into a recession. The Fed has already begun to raise interest rates, and further hikes are expected throughout the year. Finding the right balance between controlling inflation and supporting economic growth will be crucial. The Federal Reserve strives to be independent and apolitical. However, it operates in a highly charged political environment. President Trump, known for his unconventional economic views, has been vocal in his criticism of the Fed's policies. President Trump has repeatedly urged the Fed to keep interest rates low, arguing that higher rates would harm the economy. He has also accused the Fed of undermining his economic agenda. This political pressure creates a challenging backdrop for the Fed as it navigates the current economic climate. Section 5. Tariffs, a double-edged sword. Tariffs, which are essentially taxes on imported goods, play a significant role in shaping the economic landscape. They are a tool used by governments to influence trade policies and protect domestic industries. During President Trump's administration, tariffs were imposed on billions of dollars worth of goods from China and other countries. This move was part of a broader strategy to address trade imbalances and protect American jobs. While tariffs can indeed protect domestic industries by making imported goods more expensive, they also have a downside. These increased costs are often passed on to consumers, leading to higher prices for everyday items. For instance, the tariffs imposed by the Trump administration have led to higher prices for a wide range of goods, from household appliances like washing machines to agricultural products such as soybeans. This has had a ripple effect on the cost of living for many Americans. Beyond consumer prices, tariffs have also disrupted global supply chains. Businesses that rely on imported materials have faced increased costs, which can lead to production delays and reduced competitiveness in the global market. The Biden administration has chosen to maintain many of these tariffs, citing ongoing concerns about unfair trade practices and the need to protect American industries. This decision underscores the complexity of trade policy and its far-reaching implications. However, the impact of tariffs on inflation and the broader economy remains a subject of intense debate among economists and policymakers. Some argue that tariffs are necessary to level the playing field, while others believe they do more harm than good by increasing costs and stifling economic growth. As we navigate the complexities of global trade, it is clear that tariffs are a double-edged sword. They can protect domestic jobs and industries, but they also come with significant costs that affect consumers and businesses alike. The challenge lies in finding a balance that maximizes benefits while minimizing drawbacks. Moving forward, the debate over tariffs will continue to shape economic policy and international relations. It is a reminder that in the interconnected world of today, decisions made in one country can have far-reaching consequences across the globe. Understanding the complexities of tariffs and their impact is crucial for making informed decisions that promote economic stability and growth. As we explore this double-edged sword, we must consider both the immediate and long-term effects on our economy and society. Section 6. Market sector impacts. The current economic environment, characterized by rising inflation and uncertainty about the future, is impacting various market sectors differently. Some sectors are more sensitive to inflation and interest rate changes than others. For instance, sectors like consumer staples and healthcare tend to be more resilient during inflationary periods. These sectors provide essential goods and services that people continue to demand even when prices are rising. On the other hand, sectors like technology and consumer discretionary, which are more sensitive to economic cycles, may face headwinds in a high-inflation environment. Section 7. Navigating the investment landscape. For investors, navigating this complex economic landscape requires prudence and a long-term perspective. Diversification, a cornerstone of sound investing, remains crucial. Investors should consider diversifying their portfolios across different asset classes, such as stocks, bonds, real estate, and commodities. Each asset class responds differently to economic conditions, and diversification can help to mitigate risk. Section 8. The importance of staying informed. In times of economic uncertainty, staying informed is paramount. Investors should closely monitor economic indicators such as inflation, interest rates, and GDP growth. It is also important to stay abreast of policy changes and geopolitical developments that could impact the markets. By staying informed, investors can make more informed decisions about their portfolios. Section 9. Conclusion: protecting your financial future. The U.S. economy is at a crossroads. Rising inflation, the Federal Reserve's policy decisions, and political pressures create a complex and uncertain environment for investors. By understanding the forces at play, staying informed, and adopting a disciplined investment approach, investors can navigate these challenges and protect their financial future.